Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Vivek Iyer. For the markets today, we have come up from the lows of the day for sure. It's around a recovery of 75 points from the lows. The mid-caps, they continue to outperform, and that was the case yesterday as well, that mid-caps did better than the flattish moves that we saw on the benchmarks. The mid-cap index, by the way, is up 5% this month, and so is the small-cap index. So looking good there. The gainers today, Nifty Metals, Nifty Auto. The FMCG pack is also doing really well, and we do have a couple of names which are in focus, and we'll discuss them in greater details. The realty index continues to be higher. So a lot of moving parts, something that we'll discuss through the course of the show, and a lot of IPO action as well. The primary market, it never fails to amaze us with the amount of IPOs we are seeing in the market.
It's a very large supply that we're seeing as far as the primary market is concerned, and that is something that we will continue to keep an eye out for. Like you said, a couple of observations as far as the market is concerned. Steady trading session, the small cap index is the one today that's outperforming, like you mentioned, since the start of December. That's been the trend that we've seen. One particular set of stocks that are doing well today are the exchanges stocks. So if you pull up names like BSE, you pull up a name like MCX, and you pull up IX, all three of these stocks today are doing quite well in the session. The other pack, something that's been subdued for quite a while is actually the infra space. Infra stocks today on the back of news flow, project completions, project announcements. So names like PNC Infra, Edge Infra are the ones that are doing quite well. And on the other hand, while the FMCG pack has bounced back quite significantly as far as the lows of Friday are concerned, today are seeing a bit of a sell-off as far as DMAT is concerned, and this on the back of negative development coming in as far as Goldman Sachs is concerned. They have gone ahead and reduced the target price with a maintained sell rating on the stock. But moving on, let's focus on the realty space first. We are getting some source-based information on OMAX. Tim C joins us on the phone line with more details.
Well, yes, that's right. What we are given to understand from sources is that the Directorate General of GST Intelligence on Tuesday, that is yesterday, conducted searches at OMAX Realty. This was DGGI's Chandigarh zone, which conducted search alleging fake input tax credit claims. The searches were conducted and closed yesterday. But yes, as we speak today, detailed investigations are still on. And this action actually happened, what sources claim, is after the income tax gave an investigation input to DGGI after conducting their internal investigations. So let's see what happens finally, what these detailed investigations culminate into, what sort of final claims is that DGGI has to raise against OMAX Realty. That is something that we'll have to wait and watch for. Meanwhile, CNBC-TV18 has reached out to the company and is still waiting for a comment.
Okay, all right. So we'll watch out for that. But Tim C, you're also picking up something on DLF. Tell us more on that.
Well, yes, sources are indicating that Tesla has started fresh talks with real estate players, including DLF, scouting for opening a showroom in Delhi NCR. And sources say that Tesla had earlier also initiated similar talks with real estate players, including DLF, but they could not finalize a deal. And yet again, they have now started fresh talks. So let's see what happens. And again, meanwhile, CNBC-TV18 has reached out to DLF and is waiting for a comment.
Thank you so much, Tim C, for joining us with that exclusive source-based information both on OMAX as well as DLF. Well, moving on, let's look at some stocks on the move now. Swiggy is under pressure today. Mangalam joins us to tell us why. Mangalam, over to you.
Swiggy is under pressure in today's trading session. Remember, it was just a month ago on November 12th where Swiggy listed on the bourses. So as a result of which the 1 month lock-in period for a lot of shares were up until December 10th, making today, December 11th, these shares open for trade itself. So the lock-in on 6.5 crore shares, which is roughly 3% of the company's equity, opens today. And with this, nearly 12% of the company's equity is open for trade currently. Important date to watch out for would be, Jan 28th and Jan 30th on this account itself, where the next batch of shares open up for trade.
Okay, all right. Thank you so much for that, Mangalam. But the other pack, which is doing really well, cement stocks, they are on the move, reacting to a brokerage note by CLSA. Nigel is joining us to tell us all about that. Nigel.
Well, that's right. CLSA has come out with the note on cement companies, and they made 3 big points on the pricing, on demand, as well as on margins going ahead. So let's start off with pricing. They are saying that cement prices are up by around 10 to around 30 bucks per bag in early December. They say that this implies that the Q3 pan-India prices, well, they are up by close to around 3.5% on a sequential basis, though on a year-on-year basis, they're still down by close to around 5%. Now, they say that consensus is estimating a 4% hike in cement pricing in the second half of the fiscal. So sustainability of these price hikes that have already been taken, that's key. And it needs to sustain till March. Otherwise, in fact, there'll have to be some earnings revisions. So that's on the pricing aspect. Prices are up by 3.5% sequentially. Moving to demand, they acknowledge that, yes, October was weak, but they're seeing a gradual recovery in the second half of November. And they're expecting the second half of the year actually to be much better. That's H2 FY25 in terms of cement demand, further moving into FY26. So they're expecting a demand recovery. And point number 3 is volumes are expected to recover, cost as well will go down, operating leverage will play out, which will aid the profitability. In terms of their preference, they remain selective and they relatively prefer Ultratech in comparison to the rest of the pack. So explains why Ultratech is doing relatively better. Back to you.
Thank you so much for that, Nigel. So names, a lot of the cement names doing quite well. JK Cement too from the mid-cap pack doing quite well, almost 3.5% higher. But we'll now slip into a short break. When we return, we will discuss market technicals with Mitesh Thakkar and also discuss his top trading bets. Welcome back to Trading Hour. Well, one particular set of stocks that are doing quite well is the infra space today. And within the infra space, PNC Infratech, a stock that's been beaten down quite sharply in the last 3 months today, is surging in trade, almost up 11%. What is the reason for that? Post-market hours yesterday, the company gave an update to the exchanges saying that its arm, Hathras Highway, has completed a HAM, a hybrid annuity model project worth almost 738 crore. There has been a provisional completion certificate which has been issued, and the company says they are now eligible for an early completion project. But just some context as far as PNC Infra is concerned. Remember, in October 2024, MORTH, which is the Ministry of Road Transport and Highways of India, actually went ahead and disqualified the company and few of its entities from actually participating in MORTH road bidding projects for a period of a year. So till October 2025, the company will not be eligible to be participating in MORTH projects. They are free to go ahead and participate in other tenders that may come. Remember, on the back of that particular negative development, the company actually slashed its revenue guidance for FY25, expecting now a decline of 15 to 20% over FY24. Despite that, today the stock is up over 11%, and this on the back of the positive news flow. Well, moving on, like we promised you, a quick technical check on the market. Mitesh Thakkar joins us. Thank you so much for joining us. Mitesh, what is the view as far as the markets are concerned? Do you think this particular bounce can continue?
Yeah. So, on the index, my range, my view is quite range bound. In fact, I'm looking at a consolidation. So after the Nifty, kind of made an important low around this 23,300 to 50 zones, the rally was about 1,500 plus points. Now I think it's showing signs of, mild consolidation. So the directional bias is on the upside. I think eventually the range will break on the upside. But for the timing, it might be difficult to get past 24,800 immediately. And therefore, 24,800, 500 could be the range. And the idea is that you should buy on declines. Closer to about 24,500 on the index.
Okay, and what would your individual technical picks be, Mitesh?
So on those stock side, so I have a buy on Lupin and Kotak Bank. Lupin is a buy with a stop at about 21.34 and a target of 2,200 is what I'm looking at. While Kotak Bank is also positive. Buy here with a stop below 1785 and look for a target of around 1740.
Mitesh, one question. I don't know if you've had a chance to look at two charts. The first chart is Bajaj Finance. Yesterday, the company held an analyst meet. The stock, after opening flat, has now seen a spike of a little over 1%. Any specific views you have on that? And the other stock is DMart. After coming into the FNO pack, that particular stock has seen quite a bit of selling pressure. Do you see further downside, as far as DMart is concerned?
DMart, has fallen a lot and actually has been trying to hold on to these levels of 36.20, 36.30. It did give a bounce back to about 3,900. A lot of call interest over there. And then the stock with some negative news has come down. But my sense is that given this kind of oversold levels, the earlier lows are unlikely to be broken immediately. What can still happen is that a bounce back from oversold levels could happen to about 3850, 3900 zones. And a reversal in the short term will happen only once the stock is above 39.
Okay. All right. Mitesh, thank you so much for joining in today with your technical picks and levels to watch out for on the Nifty as well. It's time for a short break. When we come back, we'll talk more about stocks and the market action. Stay tuned for that. Welcome back. Well, we've been telling you how a lot of stocks are on our radar, moving around the broader markets. Avenue Supermarts is trading with cuts after Goldman Sachs has cut earnings estimates for the stock. Mangalam is here with the details. Mangalam.
Well, DMart is under pressure in today's trading session on the back of a Goldman Sachs note where they've cited pressure coming in from all the other quick commerce players and the competitive moat when it comes to value retailing for DMart thinning itself. The company has gone ahead and looked at increasing discounts, to match the competitive intensity as well. And while a large part of their stores are in the metros, the headroom for growth comes by beyond the top 10 cities itself. And to that extent, will be very important to see the store opening for DMart going forward. Citing lower revenue expectations, Goldman Sachs has gone ahead and cut their FY 25, 26 and 27 EPS estimates by anywhere between 4 to 6 odd %. And that's led to a target price cut as well from 4,000 to around 34.25. They always remain seller on the stock, and as a result of which we're seeing further decline in DMart stock price today. Mind you, the stock is now in FNO, so one can take fresh short positions out here, enabling a further downside risk on the stock. So we'll keep an eye out on that, because up until last month, it was only a cash traded stock.
Thank you so much for that, Mangalam. That explains why DMart is under pressure today. But a quick heads up as far as the viewers are concerned. Remember, the new RBI governor who took charge yesterday will be holding a press conference today at 3 p.m. And that'll be very important to track both from capital market, bond market, as well as the rupee market is concerned, given the fact that the markets will be anticipating the commentary coming in from the new RBI governor. But moving on, speaking to my colleague Rachna Dandrajani on the sidelines of Rajasthan Global Business Expo in Jaipur, HUDCO MD and CEO Sanjay Kulshrestha says that the company is hopeful that the PM Awas Yojana 2.0 will come up with big plans for infrastructure in the company. Listening to that particular conversation.
We are very hopeful that PMAY 2.0 will come up with a big plan of the infrastructure in the country.
But NPAs continue to remain a concern for HUDCO. How do you sort of plan to tread that?
Let me update on this aspect. I think our NPA is one of the lowest in the industry, and we are committed that within 2 years our net NPA will be zero. Presently our net NPA is only 0.31. So during this year only we want that it will come below 0.3, and the gross NPA is only 2.42. So
for FY25?
For FY25 I am very hopeful that it will come around 2.3%. So if you see the other players in the financial segment, HUDCO has we have a lowest NPA, that I can make a statement.
Right. What other areas of growth are you looking for the next fiscal, or what are the sectors that you're targeting, or geographies?
We are a company which provides entire spectrum of the infrastructure funding. So I don't think any segment has left behind. So green shoots are there, yes, because there are green opportunities are coming, and we want to work towards the carbon capturing mechanism, because carbon is the biggest concern, and Honorable Prime Minister has committed that we should be net zero by 2070, and every industry and every industry is working towards that goal only. And the Viksit Bharat theme is very, very defined kind of themes, and whatever the company is doing or
is there a breakup of the capex? How much would be dedicated towards green?
If you say at least 50% of the capex will go towards the green and the social sector, because if you see, the green and the social are one and the same thing. They are the part of the coin only.
Well, an interesting conversation there with the management of HUDCO. Time now for a short break. One Mobicwick Systems 572 crore IPO opens today. We'll be joined by the management of the company to discuss more on the issue and the company on the other side.
Welcome back. Digital payment platform One MobiKwik Systems 572 crore rupee IPO opens for subscription today. The price band has been fixed between 265 to 272 rupees a share. To discuss more on the IPO, the company's plans ahead, we are now joined by Upasana Thakur, the Executive Director, Chairperson and CFO, and Bipin Preet Singh, the MD and CEO of One MobiKwik Systems. Upasana and Bipin, thank you so much for joining in today to talk about your IPO. Upasana, let me start with you first up. What are the funds raised going to be used for? Is the company in need of funds for any plans that you have in place? And if yes, then is this money enough? Because the size of the IPO has been reducing. From 2021, it was around 1,000 crores. Then it reduced to levels of 572 crore rupees now.
Yeah, thank you so much for having us on your show today. I'm very happy to be here. Wanted to inform you that when we had filed in 21, the company's revenue was in the range of 300 crores. Since then, the company's revenue for the last financial year ending March 24 has been 890 crores. And for the first quarter of June, it's about 350 crores. So as you can see, the company has scaled up substantially. Further, in our March 24 numbers, we have also given an EBITDA positive of 37 crores and a PAT of 14-15 crores. So the company has started generating cash and the company has scaled up. And this is why we decided to have an IPO for smaller size this time, because we have already scaled up substantially without raising that capital in the last 3 years. In terms of the issue, it's a complete fresh issue. The entire amount being raised will be deployed towards the growth of the company. And MobiKwik has been building a payments business for the last 15 years and today serves 161 million consumers and 4.3 million merchants of India. So a good chunk of the money will be invested in furthering our payments business, which is the foundation of our company. Another substantial chunk of money will be invested in the development and growth of distribution products, where MobiKwik distributes financial products sourced from its partners to its consumers. These could be savings products, investment products, credit products, as well as insurance products. And most importantly, MobiKwik is a product and technology company. Product innovation has been the key driver of our company. And so we will be investing a good chunk of the capital towards product, data, machine learning, AI, which continues to be our core strength.
Thank you so much for that, Upasana. Well, Mr. Singh, just to bring you into the conversation, first up, congratulations. We understand that the IPO has already been fully subscribed. Mr. Singh, so give us a sense of the kind of valuation you were looking at the company back in FY21. What was it as far as the second attempt was done, and now what is the valuation that you're looking at? Has there been a change? And also, we understand that the previous year would have been a one-off high growth year, given the fact that one of your competitors was actually out of the lending business for a prolonged period of time. So will FY25 onwards, will you start seeing more normalized earnings? So number one, valuation, and number two, FY24 onwards, do you see normalization?
So actually, if you look at the business and in terms of its growth, the growth that we have achieved is despite competition, right? So if you look at the history of MobiKwik in terms of how much capital we have raised, we have disclosed it in the RHP, I think it's some 1,200 crores or something. And we have been competing with companies which have raised at least 30x or even 40x that amount over the last 6-7 years. So today, if MobiKwik last year has achieved 890 crores of scale, despite this capital working against us, and not just achieved that growth, but also became profitable, both at an EBITDA and PAT level, which none of our competitors, none of the peer set has ever done, even for a single quarter. So I would say that actually gives us the conviction, at least the management team and the promoters, that what we are building in MobiKwik has strong legs, has strong foundations, People love our product. We have more than 161 million registered users, more than 4 million merchants, and we have continued to add users across cycles, right? So if you see from 21 all the way up to 24, every year we have added minimum 10 to 15 million new registered users. So the scale of the platform has been growing, and the margins that we have disclosed in the RHP, which is both in the payment business and the distribution business, both businesses make money for us. Payments business has
So,
slightly
Mr.
lower
Singh,
margin. Yeah.
yeah, no. So I was saying, since you're saying that you are making margins, you've been able to, improve on the number of subscribers as well since that time. What my colleague meant to ask is, since the last year was very strong because of the absence of a competitor, right? Now, what will the normalized numbers look like in that case? Will you see some drop from those levels? What is a normalized EBITDA number or revenue number? Because now there's a lot of competition in the market which has come back.
So I do not understand that question, what you're saying, because I don't know which competition you're talking about, but we are faced with a lots of competition, not just in...
Well, we are talking about, one of the payment banks of, one of the larger competitors, that there was a regulatory impact on them and they couldn't go ahead with their lending business for quite some time. So that was the one that we were discussing about. But yes, please proceed.
So, so if you see last year's numbers technically speaking ended in March of 24. They should have no impact on the from the any of these issues, particular issues that you mentioned. So our growth and our users continues despite whether competition is there or not there. Even if one competition is not there, second competition is there, third competition, fourth competition is there. I think ultimately what we believe is the market is very big. The TAM for fintech in India is very big. And MobiKwik has created a highly repeatable model where customers come to MobiKwik for its digital wallet, for which we are number one in the market, for which we have seen significant growth over the last 3 to 4 years. It's not just 1 year. And it's in the last year's numbers, like I said, are not subject to any of the factors, external factors.
Okay.
They are how we built the business over the years. And even in the first quarter, you can see that kind of a growth.
So, okay, so Upasana, then that means that you did around revenues of 875 crore rupees in FY24. It was 540 crore rupees in FY23. So we can say the FY24 numbers are sustainable going forward. That's exactly what we wanted to ask, despite the competition, despite the external factors.
Absolutely. And, the kind of growth we have seen in this year, we have shown that in other metrics also. For example, if you see the payments GMV, in FY23, we did about 20,000 crores of payments processed. In FY24, we did about 38,000 crores of total payments processed. And just in the first quarter of June, we have done 25,000 crore. So you can see the kind of growth we are seeing in the business, regardless of any other external factors that are changing, because it's a long-term growth that we are showing. The company has been growing at a good clip of about 50% for several years. And we do hope that we'll be able to grow in the same manner, while at the same time delivering on our promise of trying to be profitable in all quarters and all financial years.
Upasana, we get that, that is the point I want to pick up on. Going forward, while you may not be able to give us a guidance, what do you think is a sustainable growth rate as far as the lending business is concerned? This also comes in the context of there has been quite a lot of regulatory overhang as far as growing this particular side of the business quite quickly. A lot of players that we speak to have said that there is an issue of over leveraging. So does that mean in the last 2 to 3 quarters you've actually slowed down as far as that particular space is concerned? And how do your rates or how do your personal loan rates compare to that of your peers?
So I think I want to first clarify that, MobiKwik has 2 businesses. One is the payments business, for which we have shown strong traction, strong growth last year, and in fact for the last 3 years and even for the first quarter. And right now in the first quarter, you can see the numbers are roughly 50-50 for our payments business and for the distribution business. When you look at the distribution business, while we have started with credit distribution, but we are very clear that, look, we are not a lender. If you understand digital lending guidelines, our role is that of a platform. So we work basis the market. If the market has many lenders who want to disburse certain kind of loans to the customers, then we have the customers who want those loans. We do the job of a DSA. We just connect them and we make a commission out of it. And that is the business model. Of course, all of the financial products that we distribute, including credit, are subject to cycles, are subject to rates, subject to whether lenders want to lend or not lend. But I think the way we look at the business is, if you take a longer term view, in India, the penetration of financial products, not just credit, we have other products like fixed deposits, mutual funds on the savings and investment sides, which are currently relatively small, but are growing rapidly. And the opportunity to distribute these products across tier 2, 3 and beyond through the length and breadth of the country at the click of a button, that opportunity is really, really big. I'll give you one very specific example. We have one solution which is available on the MobiKwik app, where you can invest in the fixed deposit of some of the leading NBFCs and small finance banks and get reasonably high returns compared to savings that you will get in your standard savings. Now imagine the power of opening any kind of a fixed deposit, which is a favorite savings instrument for everybody in India. At the click of a button, choosing the tenure, choosing your partner basis your risk appetite, and doing that FD within a minute. This power was not available earlier. And this is what MobiKwik is banking on, that all the financial products that we distribute, they are highly underpenetrated, especially when it goes to beyond top 100 million people in this country. And that's where we will keep going, regardless of how it changes.
Okay, Bipin and Upasana, we are completely out of time. Would have liked to chat a lot more, but this was a good understanding of the business as well. The IPO subscribed completely on day one, so we'll track the other 2 days in terms of subscription. Thank you so much for joining in with those insights and explaining to us what the business basics are. But a lot of primary market action, right? So let's stay with that. Vishal Megamart's 8,000 crore IPO opened today for subscription. Company has raised 2,400 crores from anchor investors. In fact, we spoke to Gunender Kapoor, MD and CEO of the company, on the way forward. Listen in.
Our revenue CAGR has been 26%. Our EBITDA CAGR has been 24.6%. And our PAT CAGR has been 50.9%. For the last financial year, our return on capital employed has been 71%. And just as a matter of record, in the last 3.5 years, we've generated free cash of around 3,000 crores. The conceptual approach has been that we will maintain the gross margins at current level. And therefore, we do not see EBITDA, etc., growing through pricing action. That's what we've done over the years. And if we have operating leverage, to that extent, it will show up in the bottom line. They are very excited about our business. Their intention is to be long-term investors in the company. And I'm personally confident that they would not do anything which would cause any concern to any investors in any which way.
Well, that was the management of upcoming IPO, which is Vishal Megawatt. Well, the third IPO that opened today is Sai Life Sciences. Remember, the company is looking to raise close to 3,043 crore. Via the IPO, the company has already raised 913 crore from anchor investors. Speaking earlier today to CNBC-TV18, Krishnam Raju Kanumari, the MD Director and CEO, and Shivramakrishnan Chittur, the Chief Financial Officer at Sai Life Sciences, discussed their outlook and the margin as well as the growth outlook going forward. Let's listen in.
We have a lot of, we have a lot of new molecules that we have picked up over the last, 2 to 3 years. Our product portfolio is very young, and which just tells us that as these products kind of, get to market and kind of grow, there is a lot of potential for our business and to grow. That's what we believe. Our belief is that margins going forward should improve, even further from where we are. Just given the fact that the pipeline is younger, commercial products are getting into larger volumes for our end customer, which would then mean larger manufacturing, which would mean more operating leverage in the business.
I think the growth profile is likely to stay strong for the next 5 to 10 years. And I just want to kind of point to the fact that our growth has come in pre even any shadow of biosecure.
All right, that's all the IPO action that we are tracking for you. But for now, we'll do one thing. We'll slip into a short break. When we come back, we will talk market fundamentals with Ashi Anand from IME Capital.
Welcome back to Trading Hour. Well, Ashi Anand from IME Capital joins us now to discuss the market fundamentals and his top sectoral picks. Thank you so much for joining us, Ashi. First up, give us your take on the markets, and we also understand that you have a special interest as far as the digital disruption PMS is concerned, where you have a lot of the new age companies. So first up, how are you looking at markets currently? And also, given the kind of disruption some of these players are seeing, which are the ones that you like the most?
Sure, excellent. First of all, thank you so much for having me on the show. Just starting off with your question around the market outlook, what you have clearly seen over the last couple of months is a certain cooling off of the overall markets. This is coming off a very strong up move that we've seen post-COVID. You've had 2 to 2.5 years of just a sustained kind of an up move. I think given the fact that valuations have probably run a bit ahead of fundamentals, especially in certain sectors, a certain amount of cooling off of the markets is actually probably good for the longer term health of the bull market. One of the key factors behind this cooling off has actually been growth, which we are clearly starting to see slow down. You have seen this in terms of overall economic growth numbers. You have seen weaknesses in kind of government capex. Now, this is something which we do expect to kind of come back in the second half. So the current kind of growth weakness that has kind of impacted overall economic growth in the first half should see a recovery as we go into the second half. But an important element here is that consumption has been a kind of weak for a couple of years. 2 years back, it was actually the rural consumer which was weak. You're now starting to see weakness in urban consumption. I think given where markets are in terms of market levels and market valuations, in order for markets to get back towards a sustained up move, you need greater clarity around overall growth coming back. This is both in terms of capital spends. You need government capex to come back, which is expected in the second half. Private sector capex momentum to also improve. There are clear signs of factors that will drive this. And we also we believe that consumption may take a couple of quarters to come back. It's really just some form of a lagged impact of the interest rate cycles the interest rate cycle and the inflation that has impacted kind of consumption demand. Because of this, we can expect kind of growth to possibly be a bit muted in the second half, but a much stronger recovery to happen as we go into FY26. Broadly, this could become a very interesting period for investors to really participate or accumulate kind of stocks at valuations that may be more attractive as you're going into a strong growth recovery into FY26. Around the second question around digital disruption, PMS, and outlook on the space. So this is actually a strategy that we launched in Feb of 23 at a time when there was great distress in the overall space. When we evaluated companies in this sector, I think what we very clearly recognized was that markets seem to be underestimating the sheer potential for strong outperformance of growth over the longer term. We're not just talking for over the next 2 to 5 years, but over the next 5 to 10 years, we believe there are multiple factors that will drive to continued value migration away from traditional businesses towards such digitally native platform businesses. You're seeing this across segments such as food, beauty and personal care, payments, across different sectors of the economy. There are digitally native businesses that basically have growth momentum which is substantially higher than what traditional businesses have, and we believe this growth momentum will sustain. The one thing that I think markets were really underestimating is the longer-term profitability of these businesses. And I think this is something that market participants are still trying to understand. But if you really build out longer-term projections and if you go a bit deeper into cost structures, a very large amount of the current costs are really associated with hyper growth that these businesses are currently going through. As these businesses start to mature, there is substantial room for cost reductions, operating leverage, and also forms of monetization to actually come in, which could lead to these companies turning highly profitable as we go into FY26, 27, 28. We believe a combination of this very strong growth and a shift towards profitability create a very strong foundation towards kind of value creation. And that is why we are so optimistic on this theme. Just quickly to recap, just quickly to round off in terms of companies that we really like in the space, we really like the entire food delivery and quick commerce space. Fintech is another area which is clearly very interesting, and also vertical related e-commerce.
Okay, all right, Ashi, would have liked to chat a lot more, but completely out of time. Thank you so much for joining in today with those thoughts. With that, let's quickly take a look at the markets as well. Going well, Nifty is up around 60 points. Mid-caps continue to outperform the benchmarks, up around 291 points. We do have the Bank Nifty as well, which is contributing to the gains that we are seeing, but it has come off slightly from the highs as far as the mid-caps are concerned. We'll do one thing, we'll slip into a short break, but as we do that, here is some good news for our viewers. India's business news leaders now click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play.
Welcome back to Trading Hour. Well, the Nifty, as you can see on your screens, is up almost 0.3%, up 62 points, holding out about the 24,650 mark. Now, when you're talking about some of the sectors that are doing quite well in the session, the FMCG pack, after the kind of knock that it took last Friday, you are seeing a bit of a comeback. So names like Britannia, the top gainer as far as the Nifty is concerned, Nestle India too doing quite well in the session. Even Tata Consumer, as far as some of the top Nifty gainers are concerned, are from the FMCG pack. The other set of stocks, something that Nigel spoke about earlier, is the cement pack. Ultratech Cement is the top gainer in the cement space in the large caps. And when you're talking about the mid-cap space, have a look at JK Cement, up almost 3% in the session. And this on the back of the fact that there have been some positive pricing actions taken by the industry. And on the back of that, it's time to call a wrap on this edition of Trading Hour. Halftime report is up next.